of ACCS, and we're here today to talk about inward investment into age assurance technology. Before we start, I guess just to, whilst it's not a totally full audience, maybe just to understand a little bit, have we got anyone in the audience who's actually looking to invest or investing in the sector? Or we've got people who maybe are more looking for investment in the sector? Okay, that's good. Great. So I think, firstly, just to really intro the panel, we've got two businesses that have been through in the age assurance space and ID space, various funding rounds. So we've got Paula Sussex from OneID, and I'll ask each to give a little bit of an introduction. We've also got Robin from Yoti, and we've also got a super sub who's come at short notice. So it did say that David Levine was going to be on the panel, but actually we've got a different David, David Sullivan. David is going to tell you where he's from, but Digital Trust and Safety Partnership is I think the business he'll tell you a little bit about. So first and foremost, can I ask that you maybe just give a little bit about yourselves, your business, your investment journey to date, including perhaps challenges, and just where you see that lie.
Do you want to kick off, Robin?
So hi, Robin Toombs. I'm a co-founder of Yoti, which is a digital identity and age verification provider. My kind of kick-off was back in 1997. I set up a free-to-play games site with my co-founder, and we sold that business a couple of years later in 1999, and that was a bootstrapped business. We couldn't get anyone to invest. And then we set up another business, an online bingo business, and we thought we would need investment in that business. Most people would think so, but luckily it became very popular, and you had to put as a player of those bingo games, you had to put a deposit in before you could play the games, and actually that meant as it got more popular, more revenue came in, or not revenue technically, but more funds came in, which actually meant we didn't need to go out for expansion funding because we could keep that in the bank, and then people would play the games, and then we would pay out from that funding. So that business became very successful. It's partly why we set Yoti up, because any successful gaming company ends up with fraudsters trying to use stolen credit cards and fake IDs or your IDs to register accounts to then try and commit fraud. So we realized online identity would be a problem, and that's why we set Yoti up. But because Gamesys was very successful, it allowed us to basically not go out initially for funding in Yoti. And we always thought Yoti is probably quite a difficult thing initially back in 2014 to explain the idea of reusable identity. We're still explaining it today. So 10 years ago, we thought there aren't going to be many investors who they might understand the concept, but they're not going to understand, is there an addressable market? Have you solved all the technical issues? Do you own any intellectual property? All of the things that investors would want to understand. And often they want to know there is a market already established so they can understand it and assess it for their own ideas. So telling them that there might be a market later, we didn't think would be sensible. So we bootstrapped it initially. Bootstrapping, Yoti's a pretty well-funded business because my co-founder and I have funded a lot of it for the first 8-9 years. In the last year, we've taken a convertible loan off Lloyds Banking Group. They believe in reusable digital identity, and they're part of now the UK Digital ID Connect network, and they effectively have given us a convertible loan, which later this year they can make a decision whether to convert that into equity or whether we need to pay them back. So there are pros and cons, but we can come on to that. And then very recently we've taken another debt instrument from HSBC Bank, who are our bankers, and because our revenues are now growing nicely, thankfully after quite a few years, that's a traditional form of bank debt where they see revenues going up, and as long as we continue to sustain those revenue growths, they're happy to allow us to then pay them interest and then pay eventually the loan back. Okay.
Shall I go next? So just for absolute contrast with Robin, my own background is from first in technology, companies like CGI and Atos, bless it, when it was in a slightly better state. And actually CGI had corporate venturing, so getting investment from Montreal was veritably blood from the stone. But then I zigzagged out to run something called the Charity Commission, which regulates charities here in England and Wales, getting a good sense of how the regulators work around public policy issues. But my last job was running the Student Loans Company, which is often referred to as a medium-sized retail bank, although the loan book is in excess of 200 billion, which probably makes it a bit more than medium-sized. So I got used to some of the issues that Robin was talking about. So, transactions, identity, fraud, and seeing the pain that it causes. Now, if we go to OneID, so we are an ID company that uses the bank as the verifiable credential. It's based on the Nordics, and it has a whole range of use cases, but we're passionate to be members of AVPA and to be here because, like Robin, we're a B Corp, and we basically think that however you define identity online, currently it just needs to be done more. So the internet has created a highly unregulated space where there are all sorts of harms, fraud, etc., and we're particularly focused on online harms, passionate followers of the Online Safety Act. And indeed, my tiny team, we're very small, when I asked one of the board members, who's also one of the staff, as you have on a B Corp, I said, why have you joined? Inherently, any startup is a risky venture. And she said, because I have 3 young boys and I want them to grow up in a safer online world. So our investment model is very different to many's, actually, and I think possibly quite unusual in the UK. So our founders were absolutely passionate to keep this in, as far as possible, citizen hands. So we have over 200 angel investors, which, in fact, I was just speaking to another investor earlier on this morning. This happens to be an institutional investor, and they said, we think that's probably a record. I went, yeah, you really feel it on investor meetings. And the logic of that is, is absolutely, if we can hold it in citizens' hands, OneID intends to be a public-private utility. It intends to be, a useful utility, principally in the United Kingdom. So holding it in public ownership is fantastically important, particularly to my chairman. However, that does mean that you do get what one can perhaps euphemistically describe as just-in-time funding, which is a bit like, I'm going to run out of air. We've got some more money. So it's a fairly continuous process. So you have to plan on this very hyper-agile way. So there are pros and cons of that, which I'm sure we'll get stuck into. But we only have one institutional investor, and that's the Angel Co-Funds, which was spun out of the British Bank. Shall I pass to David?
Thank you. Yes, please.
Hi, so I'm the not-for-profit guy on the investment panel, which is always interesting place to be. I run the Digital Trust and Safety Partnership, which is a trade association of companies providing digital products and services for which they're conducting some sort of trust and safety operations. So our members include some of the very largest companies, the Metas and Microsofts and Googles, but also an array of other digital products and services from platforms like Reddit and Twitch to Match Group for dating, just a really wide variety of companies. And we have a framework of best practices for trust and safety that is, I think, a proportionate and scalable approach where companies who are offering very different services with very different risks can align around a similar process for addressing those risks. So rather than telling companies what they should do for child safety or what they should do for terrorism and extremism or harassment and bullying, we say, here's a set of practices that practitioners are using in the space, and let's set up a robust framework of practices and assessments and evaluation and standards, which is one of the reasons why we're here at this meeting in this space. And we recently put out a report about age assurance that sort of brings the perspective of those platform companies to bear. So yeah, we're not we're funded by the membership dues of our members, but I think one of the things that I've been thinking a lot about is how to responsibly grow the service provider side of the trust and safety industry. When I came on board as the executive director of our partnership in summer of 2021, the organization had been around for about 6 months. And so I open up and get all of the emails that have been going to contact@dtsp.org. And 90% of them were from companies providing some sort of trust and safety related service, whether that was business process outsourcers doing content moderation at scale, specialized providers of AI or ML classifiers, age assurance providers, all very interested in talking to me and to my members about how they might provide services. And while our membership does not include vendor companies, because we don't want that conflict of interest of having folks around the table looking to sell to others, I think that there's a really interesting opportunity right now for this industry to grow. And so that's something I'm happy to share more about as we go.
Good, thank you all. So I guess the first observation as an investor, if I was to place myself in those shoes, is we've kind of got to demonstrate to get an investor on board. We've got to demonstrate we've got a growing market. We've got the opportunity to grow revenues. And back to the challenges, I guess, what do we see of those challenges? Because that needs a steady regulatory environment that allows that growth to happen. Is that the key challenge that we see in the sector?
Yeah, so I think it's a very unusual sector because most people are aware that age checking is needed offline. Obviously, you go to shops and you see kids try and buy things and they're not allowed to because of age checking. So it's kind of a sector where everybody knows that age checking is done, but in the offline world, it's done effectively for free. Some retailers would argue not, but effectively at source, it's free. But I age estimate somebody humanly, or I ask them for an ID, and neither of those things is there any money transaction at that point. So that's an unusual market that's so big, but no money's changing hands, and it's driven by regulator requirement. Online, it's exactly the same, but the regulation requirement isn't often there yet. That's partly why we're all at this conference. And therefore that puts it in an unusual place that a lot of businesses will think, well, maybe I should be doing something, but if my competitors are not doing something, that puts me possibly at a disadvantage. Kids might go somewhere else if they're not checked and I start checking them. I've also got to pay to do that probably, and that puts me at another disadvantage to my competitors. And that's unusual. You don't tend to choose to do that if everybody else might not do that and gain an unfair advantage. So that makes it quite hard if you think of pitching as a business to an investor. You don't really want your slides saying, well, the alternatives are often free in the physical world. The alternatives online hopefully are not going to be free, but nobody's yet required to do it, and the regulators are still getting their heads around some of this. Now that's probably 2, 3, 4, 5 years ago. I think it would be a bit different now if you were talking about the regulatory kind of interest in age checks. But it's still a very difficult place to start off if your first slides are painting that as your background to why you're then going to create some innovative age checking and commercialize that. So there's probably more to it, but that's a tough place to start with.
Let me just build on that. So for us, we often, because we are quite closely modelled on what was done in the Nordics, we often say to our investors, you can see what more developed digital economies look like. This has to be, cannot not be, a vision of the future. So in terms of that, how do we believe that this market is going to come into existence? We use that geographic reference. As Robin said, we are all here because we are passionate for the legislators and the regulators and maybe the policymakers to come after October, is my guess, for the election, that they really embrace what it takes to make a healthily functioning digital economy for online harms for children, as well as, you know, all the other aspects of it. And so the Online Safety Act has a huge role to play here this year. The specificity of the requirements on 100,000 odd platforms that are thought to be within regulatory scope, actually engaging with the industry as much as they can to say what is the art of the possible, such that the supply and demand side really understand, how does this work? How does the process flow work? What will my end user feel? What are the costs? Can I pass it on? Can I change my cost model around this? And all of that, so that when the enforcement lands, that the market is saying, right, okay, we know what we need to do. Some, possibly some of your members, like Meta, may say, we want to be the progressive, and this is what we're going to implement ahead of the curve. But they also need to know how to do it. And then only that specificity, when the buying part of the market indicates, yep, we're going to buy this, investors will say, we're clear enough. We can see that they will buy it. Just one last example that both you and I share. The government, perhaps, I don't know if it's accidental, but the change during COVID of being able to evidence right to work online, that then becoming the lead use case on the UK enabling legislation, which will become law possibly in the spring, meant that every employer knows that they have to and can do a right to work and a disclosure and borrowing check if they need to do it online. And they do. And the market's there. So if Robin and I were trying to raise funds on, we're in the pre-employment ID automated checks business, you could point to an investor and say, every company knows it can't afford the fines which have gone up, etc. In age assurance and age verification, particularly around online harms, my take, but we have Tony in the audience who will say, no, it's perfectly clear how it's all going to operate. I think the market can't see it, and therefore, what are investors investing in? We kind of know it's got to happen, will happen, that other countries have gone there, but it is that gap between now and December, one imagines.
Yeah, and I guess from what I've seen and talked to the people at the conference yesterday, today, it feels that the technology is actually there or ahead of the rest of the regime, if you like. So it feels like there probably is a little bit of catching up. Have we got confidence around the legislation that it's the right path that will allow us to get there? We're on the right rails. We just need to get the carriage rolling.
Yeah, and I think also, ID and age are very closely related. Not always, and again, at this conference, there's a lot of discussion about how you could do an anonymous age, but reality is for a lot of people, they will end up doing an identity-based age check, and obviously that gives you the opportunity as an age provider to think a bit more about, okay, well, I may not be able to monetize age as easily or as quickly, but there might be quite a lot of demand for it, and can I build other services which I can monetize? That could be identity services alongside age, particularly if somebody's putting ID, PI information into your process, you might retain that as a reusable. So it's kind of forced, I think, age companies to think a bit more about, well, am I really just going to be a specialist age company, and is the market going to develop quickly enough for me to attract investors who think like I do that will kind of work, or do I need to also be able to talk about I could not pivot, but I could also be in the much bigger identity market. The identity market is much clearer that investors understand it. People pay for identity. They pay for identity documents offline. They pay for identity online and have done for 10, 15 years. And there's a lot more regulation in place in countries today for identity. So in some respects, you don't want to try and do too many things. Businesses often do best when they focus on executing and doing something really, really well, and not trying to do too many things. But probably I think it will be more difficult to attract investors if you're saying I'm just going to do some age and I think I can protect that market, because obviously the identity companies may well think, well, I do identity well, I've got relying parties, I've got funding, perhaps I should do age as well, particularly as age is often ID based. So I think it's a difficult market, but certainly today compared to 5 years ago, much more likely to encourage an entrepreneur who could actually begin to point to, well, you're investing in the next few years, not the next 6 months, and actually there will be a path to revenue, but you might have to think hard about whether that's just solely from doing an age check alone.
And maybe more for David and Rob in this one, if we look a little bit beyond the UK, are we actually seeing, any differences or any, areas where it is starting to work and we're getting maybe a little catalyst of opportunity that's moving quicker?
I can go first on that, and just so it's obviously there's a lot of legislative and regulatory churn in this space, absolutely, and I think a lot. Just coming from the United States, where there is a lot of talk at the congressional federal level, and a lot of action that it is hard for anybody to keep up with in terms of what is happening on a state-by-state basis in the United States. Our organization, DTSP, doesn't take positions on legislation. We're not a legislative advocacy organization, which saves me that headache. For example, I was looking at a draft of a report analyzing the state of age verification related legislation, both in the US and internationally, an early draft of something earlier this year. And between working on that draft and then getting a revision, my own state, Colorado, had introduced a new bill on age verification that's moving rather quickly. As I think a lot of folks at this conference may know well, there's a big difference between laws being proposed, especially at the state level in the US, and laws that will pass constitutional muster when it comes to the First Amendment and free speech. And so there's a lot that will need to shake out in terms of what different types of approaches are being proposed and what's workable, and proponents of those laws crafting more narrowly tailored approaches that might survive scrutiny as they get challenged. Internationally, again, there's, we've heard from many regulators from around the world at this conference about how they're thinking about these issues. And there is a lot of attention, a lot of interest, but not yet clear kind of solutions. That said, I do think that there's a lot in terms of a market, especially more broadly in terms of trust and safety. And I think that age assurance providers and age providers, by associating within that world of trust and safety, may be able to do well. I'll probably mention it a couple more times, but there's a report that came out, I think it was last month, Trust and Safety Market Research Report by an organization called Duco, who do great work in this space. They identified for trust and safety addressable market of $25 billion. And that includes, a lot of it has been the large, business process outsourcing of content moderation at scale, but increasingly a lot of technology. This has also benefited from a lot of folks who used to work for large companies who are not anymore and are starting up their own things or getting involved. And the revolution in AI and the extent to which AI is gonna be playing a role in trust and safety, including in the age space. So I think that there's a lot there. that investors would be, would benefit from looking at, and which those seeking investment should be pointing to.
Thank you, David. Robin, are you seeing anything different, or Yoti operates in many territories?
Yeah, there's definitely much more market interest in Age today, even compared to 12, certainly 24 months ago. So our revenues in Age have gone up. They've doubled, more than doubled each year for the last couple of years. Half of that's from overseas, and half of it's from the UK, because partly the UK has been probably a bit more pushy with some companies to kind of begin to introduce some Age, so particularly things like the vaping sector and some other sectors where they don't really feel comfortable saying that they're not going to do it, if they're asked. So yeah, definitely the market's picking up. I think that there's definitely opportunity for more innovation, and I think investors are often looking for companies who are innovating. It's a difficult one because sometimes you're innovating, and the regulators may not yet be up to speed with that innovation. Now, in some sectors, you crack on because the law actually may be silent on whether that innovation meets a compliance issue, or just there isn't any regulation in that particular sector, and therefore you see some very, very fast growth in some companies because of that innovation. WhatsApp grew unbelievably quickly, partly because of the virality, and partly there was no real regulation which said whether an 8-year-old could or couldn't get onto an app and message. But in our sector there is more regulation, and therefore there's a period where you need to innovate and then explain the innovation and try and get adoption. And regulators take time to think things through. They don't want to make bad mistakes. They don't want to discourage innovation, but they don't want to kind of be too quick to allow things and then find there's lots of holes in those things, and then it looks a little bit like the regulator doesn't know what they're doing, and they're meant to be solid, wise people making good decisions. So that's difficult for an investor, because they would probably say, well, get on and win the market, get on and lead the market, and get marketing and get talking to businesses. But a lot of businesses may well say, well, is it yet regulatory approved, and have you gone around 50 states in the US and another 20 countries to make sure you're ready to go? So there's some pretty tough challenges there for innovators. Having said it, it will be a big market. I think as a network, most people are going to have to prove Age quite a lot in future online. There's loads of new kids coming through each year who will need to at some stage prove Age as well. It's just what kind of business models are going to work. Are they going to be solely providing Age to other people who may well be monetizing and sharing some revenue, or can you just do it through Age or Age and identity? Not sure everybody yet is quite sure, but certainly there is going to be lots of companies who will have to pay for suites of services from companies, trust and safety companies, or just directly with an Age company if they think that's the best way to go.
Okay, and I guess if you assume that regulatory drivers are going to stay behind the curve, that presumably suggests that it's going to be down to businesses to make the advances. Do we see any specific use cases? Maybe we can come back to whether or not the brand of the social platforms are actually going to make those changes. Are there drivers and use cases where we see it might just come from?
So just picking up on that last thing, another trend will be for some form of ethical investing, without a doubt. So, the sort of investments that you have in your portfolio hold water, and investing in the age assurance sector has got to be one of those. I don't know if we're seeing that. We should. Once again, just very apologies, parochially talking about the UK. Ofcom's stance on this really powerful Online Safety Act has been laudable so far. So it has come out with a very, very clear, and actually, I don't know how many people saw the consultation released in December. The press release around it was unusually, I thought, hard-hitting, but it made its point. It really made its point. but businesses are entirely rational, and they've had 10 years of a flourishing online business, which has had very little regulatory overhead, very little. And I suspect unless it starts seeing meaningful fines, as happens, that gave the teeth to GDPR, I suspect it's going to still take quite a bit of push. And that's why, organizations such as, Tony's, AVPA, the various charities that are saying, for our children, we should be doing this. So societal pressure will probably help it. So I think the Act has the capability. It's about the implementation and the enforcement. And if we can see societal pressure, which sometimes you can, that says this has to happen, progressive companies, not just the big names, but perhaps some of the small ones, saying we're going to first, we know we may lose users, but we think this is the right thing to do.
Good.
I think it's also a matter of trying to transform the business case here a little bit. I do think that, generally speaking, whether it's age assurance or other components in trust and safety are seen as a cost center, as seen as the cost of doing business or of compliance, and compliance is a major driving factor. But the folks that I've heard speak most compellingly about this issue talk about the value in terms of return on investment of creating healthy communities online, and that will drive growth, and that is the secret to unlocking trust and safety as part of investment and growth and all that. And so I do think that's something that a case can be made, should be made more persuasively, and should be heard by, in particular, investors, because until the investment community starts to see the benefit of taking these issues on before they become problems down the road, it's going to be very hard to get startups to be investing their own, hard-fought investment cash in what they see as a cost center.
Good. I think maybe now's probably a good time to maybe open up for observations, questions, any additions to the conversation.
Thanks, Nick. Tony Allen, Chief Executive of ACCS, so you're the boss. Can I just got a couple of questions really. One really is about sort of how you feel as though the kind of investment journey of small business to sort of global position has changed over the last sort of 5-10 years. There was kind of a period of time where people were starting businesses that their basic strategy was one day this business is going to get bought by Google or Apple or something like that for $1 gazillion for frankly not very much. That kind of bubble, I think, largely burst quite predictably, but has kind of left behind it a kind of a feel that there's a kind of there seems to be a little bit of a like, well, what now? What's the exit strategy? What's the where these businesses are building and developing, but where are they going to go? And if you're an investor, how are you getting your return on those investments from anything other than unicorn status growth? And I don't feel as though there's much real sort of replacement for those kind of exit strategies out there.
So I think certainly in the SaaS sector, so I'll stick to the IT SaaS sector because I don't know too much about lots of other sectors, but there's definitely been a trend towards globalization of product and entrepreneurs who can develop a product which is getting traction quite quickly in a particular market. There's a lot more finance now available for those that begin to prove that quite quickly, to not just establish themselves successfully in a few years in one country, but to actually take a large amount of capital on in Series B, Series C, Series D, and become a very, very popular big SaaS provider because it scales. You've got lots of operational issues, but that's partly where the funding helps you go through. But there's definitely been a trend towards some of those successful companies being spotted very early as having a nice product, it's doing well, and then to accelerate that. And that's never really happened before. 20, 30, 40, 50 years ago, you were, you know, spending a decade trying to just get your product to be, you know, pretty good in one market, maybe a couple of markets, and eventually after a couple of decades into a wider set of countries. But that's not how it works in a lot of those SaaS products. I think bubbles, you know, definitely up until end of 2020. Some of those bubbles are now much more kind of, okay, you've got to prove that you can actually start making some money out of your IT product. And, you know, if you don't, I'm not going to keep on funding you for too long, hoping that somebody buys you. You know, I want to see some profit as well, so that if somebody doesn't buy you, or they want to buy you later for a larger amount of money, it's based on a profit, and there'll be more people interested in buying a profit stream than possibly just one or two who might want to buy, you know, the fact that you've got a lot of users or whatever. So I think that makes it again harder, because, you know, you're up against possibly a competitor who might take that funding route and you might not, or your product might be not quite yet there to do that, and then may accelerate away over 2-3 years. And of course you worry that that means you're going to fall behind, and maybe too far behind, and be less attractive to investors. It's not always the case, but, you know, unfortunately as an entrepreneur, you're often quite paranoid about other people doing better, and are you going quick enough, and have you got enough funding to do what you want to do. But usually things take longer than everybody thinks they do, and even with funding, companies don't always grow so quickly that it crowds out the market for other companies who might be more the hare, more the tortoise than the hare.
Thank you.
Tony, can I come back on Tony's question? I don't know if that day has gone. I don't know. I mean, I think, you know, the FANGs have immense war chests and are always out shopping. So I'm not a great expert, but I don't know if it has. OneID has a noble objective to float on the London Stock Exchange, which is back to the public-private utility thing. But that is distinctive, shall we say, I think is the best way of putting it, not typical. The only thing I would say is I think there has to be, or will be, consolidation roughly in this sector, and whether that consolidation is based on technology, I don't know, but I think you know, it's a very, very open market at the moment, as you know, so logically there will be some consolidation, but I don't know if it will be you know, the FANGs coming around saying we're going to buy, you know, 20% of the age assurance companies because we think that's a cool market. I think there will just be aggregations of players.
I think there are a couple of prominent examples in the last couple of years of trust and safety sort of vendors not in the age space being acquired by bigger platforms. There's a company called Two Hat acquired by Microsoft, Centropy acquired by Discord, Kinzen acquired by Spotify, I believe. And even last year, you actually had one of the larger vendors, Active Fence, purchase another vendor company, Spectrum Labs. So there's a lot of activity going on in terms of those sorts of things. The question is then what comes next, I think, and will we see, you know, one, you know, is that enough to get the attention of investors who want to invest more in this space, or is there, as you're suggesting, I think, a need for maybe a more mature environment that to really bring in larger investment?
Interesting.
Jason Cheap, Post Office, definitely asking this as from a personal perspective. Where along the hype cycle do you think the solutions in this space currently are, and how do you think that is impacting investment and valuations?
That's a great question. It's difficult. I think lots of companies, you know, the age market, you have to have great liveness. You know, if you're going to do facial age estimation, either you've got to go and find somebody to do liveness for it, otherwise it's pointless, or you've got to develop that as well. If you develop good liveness and good facial age estimation, probably in a place to hype that you've got something pretty useful. But you've got then other people saying, you know, I can beat it, and you know, your thing, you know, isn't as good as you claim. So it's pretty hard for investors to work out sometimes, you know, who's right then, and that's partly good investors work that out better than average investors, and poor investors usually don't work that out at all. So, you know, that is part of their job, and you know, we're not the only industry where that might be a challenge for investors. But I do think there's a lot of unknowns at the moment on, you know, is AI going to, you know, do a lot of things that currently today, you know, a human moderator might do, or a human moderator might be complementing the decision making, but the AI is doing a lot of the grunt and flagging the hard choice ones, but 80-90% of it is being done by the AI. So a lot of investors might, you know, begin to understand that. And is that hype, or is that actually a huge change in how many people might be doing something, you know, today, which in 5 years' time, you know, less people will be doing it, but actually it might be being done at more scale because the AI can scale. So it's quite hard sometimes to work out whether you're hyping some of those things enough, not kind of deliberately, you know, kind of misleading people, but trying to work out whether AI is going to do 10 times, you know, what's being done today in some of these markets at a, you know, 100th of the cost, or whether it might be different to that. It's quite hard for anybody really to know. I guess that's where the magic of some investors work that out with the right people and make good bets. Others aren't too sure but make the bets anyway. And it's only in history that we work out whether the hype was too much hype, and who was talking a good game and who wasn't walking the walk.
No, I mean, in answer to the valuation part of that, without giving too much away, is there a sort of a guideline that I know you've gone in with convertible loan notes, which means the valuation may not have been set at this stage and may depend on the round, but is there an understanding of, you know, it's a multiple of revenue, or it's an EBITDA dependency in terms of the expectation perception?
Yeah, so we're probably no different to anyone at our stage. So we're kind of Series B stage, and we took £12.5 million on from Lloyds, and then £12.5 million on from HSBC. So at that stage, they're really looking at revenue growth and a revenue multiple. And, you know, those 2-3 years ago might have been 10-15 times, depending on lots of issues. You know, what kind of product is it? What kind of addressable market size? How quickly is it growing? How many other competitors? So lots of things partly affect the multiple, but it's fairly traditional that if you're in that stage, it's going to be more revenue multiple than EBITDA. You're probably not at EBITDA. You're probably in reinvesting and trying to grow to prove that you're going to be one of the 5 companies that gets there. So revenue multiples are definitely lower in the last year or two than they were 2-3 years ago, particularly in the ID sector. And that's partly, there's a huge amount more competition in the ID sector. There's probably 50 really pretty capable companies doing it. So there's a lot more choice for businesses. That makes it harder for investors to value you. Another ID sector, you might be growing, you know, revenues nicely, but they're thinking it's semi-mature now. There's 50 other companies who've already got lots of customers. You're going to find it harder in that market compared to if you were doing that kind of growth 3, 4, 5 years ago.
And Paula, are you seeing the same, or obviously different model in terms of?
Yeah, very
if it's
different.
not, CLNs.
Very different. Can I just go back to the hype cycle question? I think which he didn't answer directly. I think we are in very early stage of the hype. But Robin's good comments about AI. AI is sucking all of the oxygen out of any, you know, anything. And it would be grand the day that somebody says, all right, that's what it does, that's what it doesn't do, jobs up, jobs down, 99% of the time it's right, you're just screwed if you miss the 1% where it's got it really wrong. End of, move on, let's have a look at other markets. So, I mean, I don't think that's a direct impact on our sector, but I think we are in the early stages of the hype. What was the second question?
Valuation
Ah, yes.
from your own perspective.
Yeah, I mean, we don't, I think, publicise our valuation. It's healthy, shall we say?
And it's directly, hopefully, moving over time with revenue
Correct.
lines.
Yeah, yeah, correct, correct, correct. Any more questions?
Hi, Nick Mothershaw from the Open Identity Exchange. Are investors aware or concerned about the risk of governments issuing identities, which would be in competition with the kind of identities that you're providing? So from UD Wallets, from if one login in the UK comes into private sector, is that on investors' minds? And how, if so, how do you deal with that?
Yeah, no, I'm happy. And for people not in the UK, so One Login is the currently fledgling G2C, government to citizen identifier. So I don't hear any investors being concerned by it, but some of that is the understanding. I strongly suspect that the Government Digital Service is going to stick for quite some time for it being the provider of government transactions. So, you know, benefits, driving licenses, you know, student loan applications, all that sort of stuff. I don't think they intend to come into the commercial sector, never say never. But also inherent for the UK government is always, I promise we're not trying to create an ID card again. So if you flick through, and there's various, you probably know this, in consultation documents, they'll always say the government's really passionate about a functioning digital economy, but doesn't intend to create an ID card. So I think that could limit their, you know, their ambition, if you like. I mean, our model in the Nordics, it is a simple single system. So you use your bank ID in Norway and Sweden for everything, from online purchases to marriage certificates, you know, absolutely everything. And it's in the bloodstream of the country, which means you have a really productive digital economy, fraud right down, but I do not think we are going to get to that position in the UK, because we will have, as you say, One Login in the public sector, and then you will have other solutions in the commercial sector, I think.
You know, we definitely had some investors who, you know, we do some government revenue, business to business, so software supply to them rather than reusable ID service. And certainly it was a question that investors wanted to understand how much of your business is UK government sector. Identity tends to be, you know, one of the things that is bought by government services, not just central government, but local government, quangos or whatever that they're called in different countries. So state agencies, even if they're not part of federal government. And, you know, if that was a large part of your revenue and you were only focused on that single country, something like a One Login would definitely be something investors would want to understand. Do you think this could end up in the private sector? Would it you know, destroy some of your revenue potential if that was the case? Like, we luckily, quite a lot of our revenues are outside the UK, and we're not just doing identity, we do age, we do e-signatures, so it wasn't a big issue for them, but it's definitely something that I think some investors would be nervous if they thought a government, particularly a trusted government, could do the technology well, and the population on a survey might say, once that's available, I'd be happy to use it. You don't want to have 10 ID wallets if one or two work well. Governments don't tend to do all of the things that people would like them to do with a service. They might do certain bits and deliberately keep out of other bits, or they might think, you know, that's going to crowd out the private sector, and actually we don't want to provide all of the extra things which actually you might want to do with that type of wallet. So I suspect even if One Login becomes very popular, the government's probably, I suspect, going to think it's good to have a whole load of other choices, because if people want a more complicated service, they can go and get that from the market. We don't have to build it ourselves. But also for inclusiveness, they might feel that, you know, we need to make sure that everybody can choose at least one, and, you know, that might mean, you know, the government ensures that there's one which you can take from the government.
Great, thank you. I think we've probably just about run out of time. We can clearly have a couple of questions at the end, but if I can thank the panel, thank the audience. We will be around for a couple of minutes to take it separately if that helps. But otherwise, if I can say for everybody, if you want to stay in here, the next up is the use of age assurance to secure player safety and responsible gambling. Or if you want to head over to Grow, then there's a meta presentation on the deployment of age assurance solutions on a global scale. So hopefully, if that works, we can take the rest of the time until we get pushed out, if you wish.
Yeah, just a quick housekeeping note, Nick. Thank you very much, first of all, for chairing that panel, which has been excellent. It's really interesting for the people here and the people online to listen into, and to the panelists as well. We have an evening event this evening, sponsored by Meta. You can hopefully swallow your own morals if you don't.